Hello dear traders and partners of AMarkets. My name is Daria, I'm the financial advisor, and today we're going to discuss the situation in the global financial markets. So let's get started. The euro sank to a two-decade low versus the dollar as a jump in natural gas prices reignited worries about the Eurozone economy, and data showed business growth in the region slowed sharply in June. Recession fears in the Eurozone were exacerbated by worries over an energy crisis in Europe. Tuesday's data showed a sharp slowdown in business growth in June, after Monday's news of a seasonally adjusted trade deficit in Germany versus expectations for a surplus. Be it Germany's energy crisis or Italy's draft or the Bank of England's grim economic outlook, everything contributed to the pessimism surrounding the economic conditions in the EU. Adding to the downside pressure was the hawkish bias of the European Central Bank policymakers, which in turn suggested aggressive central bank action and further strain on the bloc. Next, USDJPY, and the dollar rose against the Japanese yen as the dollar stood tall as investors awaited non-farm payroll data later in this week. The payrolls report on Friday is forecast to show jobs growth slowing to 270,000 in June, with average earnings slowing a touch to 5%. Monday and Tuesday offered little in the way of economic data, but later this week the US Federal Reserve and European Central Bank released their minutes from recent policy meetings, and on Friday widely watched US payrolls data will be published. On the Tokyo front, yen bulls have strengthened on rising expectations for higher price pressures. Sosaki Kameda, a former chief economist at the Bank of Japan, said that the sharp decline in the yen on a broader note will lift the inflation outlook. The inflation rate may remain well above 2% this year. Last XAUUSD, and gold price consolidates the biggest daily fall in 3 weeks, around $1,770, refreshing intraday high during Wednesday's Asian session. Even so, the precious metal remains below the key support turned resistance after confirming the bearish inverted cup and handle formation the previous day. Growing fears of global recession joined speculations that China may recall COVID-led lockdowns to weigh on the gold prices the previous day. The pessimism intensified after Germany and Italy flashed economic warnings, while the Bank of England also released a report conveying the grim economic outlook. On the same line was China's mass COVID testing announcement. Additionally, strong prints of the US factory orders for May also propelled concerns about fast aggressive rate hikes and contributed to the market's pain. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention, subscribe to our channel, and we will do our best for you to reach success trading with AMarkets.